Headquartered in Gurgaon, Haryana, Sona Comstar is one of India's largest automobile component makers. The company, which has an 8% market share in differential gears and 4% market share in starter motors globally, gets 70% revenues from exports and international markets. Sona Comstar has seen an annual revenue growth rate of 35% and an average EBITDA margin of 27% over the last 5 years. The group, which clocked a turnover of Rs 3,185 crores in FY24, is investing heavily in electric vehicle technology, connected vehicles and R&D. Founded in 1995 by Sunjay Kapur, one of the pioneers of the Indian automobile industry, the Sona Comstar Group has completed 25 years of manufacturing operations in India. CNBC TV18 travelled to the company's first ever manufacturing plant in Gurgaon to meet Sona Comstar Group Chairman Sunjay Kapur, who has been leading the company for close to a decade.
Sanjay, thank you very much for joining us today, taking us time and showing us around your plant. Give us a sense of how all of this came about 25 years ago. Actually, the company was incorporated in 1995 as Sona Okigawa Precision Forgings Limited. It was a Japanese JV, 75-25. Tell us the thinking and the vision with it came about.
So we started in 1995, you're absolutely right. My father started his life making gears. He started a company called Bharat Gears Limited. So I think he had this great passion for gears. And we had an opportunity with Mitsubishi. This is right after we started Sona Koyo. Sona Koyo, which was then called Sona Steering Systems Limited, was started back in 1987, production in 1989. In 1995, we had an opportunity to joint venture with Mitsubishi Materials, which was licensed by a company called BLW to make warm forged gears. And we took the opportunity because we saw an opportunity in the market to make bevel gears. And that's how we started back in the day. It was called Sona Okigawa Precision Forgings Limited because Mitsubishi's plant was in a place called Okigawa.
All right, so give us a sense of how much the company has grown in the last 25 years. We just referred to the 10 manufacturing units you have in India and abroad, but how much has the company really grown?
So we've grown almost 30% year on year. It's been a great growth story for us. We've grown through a lot of effort in terms of R&D, a lot of development. We've built the gear business, the differential gear business, over a period of time, and we've expanded to differentials, from just pure play bevel gears.
Right. Now, if we were to also ask you about your vision, every chairman has a certain vision for his company. Your father had one. What would your vision be? If I were to ask you, what does Sunjay Kapur want his company to look like in the next 25 years?
So, we've been very focused on technology. We will continue to focus on technology. I think that's the way to look at businesses like ours. We've been in the automotive space. We're now looking at mobility as a space. And, who knows, 20 years from now, mobility as a space will change. I think a lot of, energy transition will happen in mobility. And we'll continue to grow in that space, continue to invest in technology, and continue to be a technology-oriented business.
Right. What about your growth plans in terms of setting up more capacity either in India or abroad?
So, we love manufacturing in India, to be honest with you. We have assembly plants in Mexico, in the US, in China as well, and we've got a facility in Serbia which does sensors. So we will continue to manufacture as much as we can in India. We have expanded capacity in bevel gears and in differentials, and we'll continue to expand capacity, as the market requires it. We've been fortunate that we have close to 9% of the global market with differential gears. Our differential business itself is also expanding, and we'll continue to add capacity as and when required.
Right. Considering you're such a big supplier to the passenger vehicle industry, does the current lack of demand somehow worry you?
So, our industry is cyclical, Parikshit. So it goes through cycles. We supply to every segment within the automotive industry, so which we're fortunate to supply into commercial vehicles, off-highway, farm equipment. We do traction motors for 2- and 3-wheelers, electric 2-wheelers and electric 3-wheelers, and we do passenger car. by virtue of size, passenger car is the largest because globally passenger car volumes are such. And like I said, we go through cycles, and these cycles, happen in every industry, in every sort of economy as well. And and we can weather the storm. It's not something that's bothering us. Our business is still growing because we're capturing more market share, within customers. So it's been a good run for us.
Right. Now, in terms of your priorities for growing further, tell us how you would like to deploy your capex. Through your recent earnings calls, one gauges that about 1,200 to 1,500 crores is being set aside for the next 2 years. But what will be the capital requirement of the company for the next 5 to 10 years?
So I think it'll probably double from there because we will continue to expand. We will look at opportunities. We will look, like I said, we will look at the mobility space because it's opened up to the auto component industry. More than anything else, you're seeing different forms of mobility open up, and that is giving the automotive industry or the component industry an opportunity to play in that space. You've seen the pure play ICE, you've seen electric vehicles, you've seen alternate fuels, you'll see drones, you'll see bots, you'll see eVTOLs, which are electronic vertical landing and takeoffs, as opportunities for the auto component industry to play in, and we'll continue to explore those opportunities.
Right. In terms of mergers and acquisitions that you are possibly looking at, is it just going to be in the automobile space, or you look at things like semiconductors, chip designing, defense?
So we will look in where technology is attractive. Again, we will continue to look at technology. We bought a company in Serbia that does millimeter wave radar, chips that can actually detect a baby's heart rate and breathing rate. So again, that's a safety standard requirement in a car in Europe if you want a level 5 rating. And we'll continue to look at opportunities like that. We will continue to look at that because the automotive industry is transforming into more software-driven, more sensor-driven, than what it was in the past. So as the industry changes, we'll have to adapt to that change, and we'll look at opportunities.
So overall, you want to stay with the automobile business only?
So like I said, we want to be in mobility because we know that best. And let's see where mobility goes in the future. I can't say where it'll be 10 to 20 years from now. Currently, the way we look at our business is we're in the mobility space.
Okay, you recently set up a merger and acquisition committee as well. If I were to ask you, what are the priorities that you're setting out? What are the kind of companies that you want to acquire to grow?
So look, we are a company that's high in profits. We're a company that's high in growth and high in tech. So we'd like to acquire something that is similar to what we are in. It's not always, possible to buy a company that has high growth, high tech, and high margins. However, we look at what is closest to what we are, so that the culture fits. Doing an acquisition is always not an easy game. It can be challenging. We've done an acquisition, for example, with Comstar. We retained the management because the management is fantastic. With the company in Serbia, we've retained the founders. We only own close to 60% of it. The remainder is with the founders. We'd like to work with teams that are good because at the end of the day, it's management that's really driving the business.
Okay. So if I were to ask you by 2030, how much do you expect the company to grow in terms of revenue, turnover?
So, I hope we continue to grow at 30% year on year, but who knows? It all depends on the market. It depends on what opportunities we see going forward. We've had good growth in the past, and I hope that, this growth doesn't stop.
Right. 33% of the revenues came from battery electric vehicles in Q1 of FY25 for you. How do you expect that to increase?
So look, our plan says over the next 5 years we'll be almost 79%. Then that's public knowledge because of our order pipeline. And I think the way the world is going, we're going to move towards electrification. We're going to move more towards EVs than ICE. That's the way we see it. And if that's the case, we'll continue to grow in that space.
Right. So what's your current investment mix if we speak about different technologies? Today we're learning that companies are working on CNG in a big way. They're working on strong hybrids. They're working on hydrogen fuel cell. So when you speak about mobility as a subject, how much are you putting in terms of investment, and what would be the breakup like?
So Parikshit, the way I look at it is 10% of our business is ICE dependent. The rest can go into any kind of platform. So we're not in the engine. So we're not sort of, impacted by that. When it comes to EVs, you know we're supplying to EVs. If a company wants a hybrid solution, we have a hybrid solution. So we have a solution for every type of vehicle. So we will go with what the OEM requires.
Over the last 25 years, when we look at Sona Comstar's journey, you've grown a lot through collaborations, be it Mitsubishi, be it Comstar for that matter. You've brought in a lot of partners along the way. Is that a conscious way to grow, and will we see more collaborations going forward?
So, you know, collaborations are very good when you need a technology. If you look at the Indian auto component industry, you know, and thanks to Maruti, when they started back in the late 80s or the mid 80s, they invited companies to collaborate or joint venture with other companies, and therefore we brought technology to India. I think it's our responsibility to learn technology, to invest in our own technologies, and where we don't have technologies, I think it's good to, you know, build a partnership and build a relationship where you can leverage the technology of the partner. So I think technology partnerships are essential. I feel that, you know, companies in India in the auto component space have had great growth through joint ventures. However, I think it's important also to invest in our own technology so that we can own the technology, so that the world becomes a market as opposed to just a geographic market that you're addressing.
Right. What's the kind of growth are you looking at from your exports? You're a big exporter to the United States, to Mexico. You've set up to grow your export business.
So, you know, I mean, our exports will grow according to what the market grows at. We have a plant in, 2 plants in Mexico, one in the motor division and one in the driveline business. We continue to manufacture here in India and assemble some sort of motors in Mexico for some North American clients, customers. But, you know, we will grow as per what, you know, the market grows. So we're very linked to OEM growth, where OEM business where we, you know, supplying to OEMs, and we'll continue to grow in that.
All right, Sanjay, just hold on to that thought. We have to take a break. So when we return, we're going to speak to Sunjay Kapur more about Sona Comstar's journey, his father's contribution to the business, and the next inflection point that Sunjay Kapur is actually looking for Sona Comstar. Don't go anywhere. We'll be right back. Welcome back. We are joining you from the manufacturing plant of Sona Comstar here in Gurgaon. The company is in its 25th year of operations, a milestone that they are celebrating this year. Joining us to talk about the company's journey is Sunjay Kapur, the chairman of Sona Comstar. Sanjay, thank you once again for being with us. I'd just like to ask you a bit more about your father's contribution to this company, and also how the brand name, actually Sona, came across.
Yeah. So, you know, my father was a great visionary, and he really was a technocrat, if you want to call it that. And his real focus was to build technology. He was very focused on building quality in terms of our business, with a high quality investment in technology. He always encouraged investment in technology, and that's why we're sitting in the space we are today, and we have that edge over a lot of companies because we've invested heavily in technology. He brought the technology from Mitsubishi. We eventually bought BMW in Germany, and again, that was also to buy the technology or to learn the technology, and we transferred a lot of technology, not just transferred, but also learned the technology from Mitsubishi and built it here, and as well as in Germany when we had that operation. Sona really comes from the fact that my father came from a jewelry business, Sona meaning gold. At that time, jewelry was sold based on trust alone, and for him, Sona signified trust, and that's really where our brand came about.
Okay, what was the biggest learning that you had from your father?
For me, my father talked a lot about the fact that we should be open to change. He wasn't a traditional sort of person who was stuck in any of his ways. If he found something new, he was happy to look at change. He loved to sort of educate himself, and he loved for all of us to educate ourselves. So we continuously learned. And he built like a learning organization, which is why we've always sort of had this aspiration to grow, and we've achieved a lot of success and growth because we've always been willing to learn new things, willing to change, willing to adapt, and therefore we've adapted to what the market has required. So I think that was one of the biggest learnings, other than the fact that, integrity was a big part of his management style, and therefore we've, had good governance, we've had good sort of, measures in terms of the way we look at things and live by our values.
Right. So if I were to ask you about your biggest achievement in the last 25 years or since the time you took over as chairman, what would that be?
I think our focus on technology and continuously to focus on technology and not be swayed by anything else, and our commitment to and dedication to technology has been phenomenal. Over and above that, I think we have a great management team, and I'm happy that I've been able to sort of step away from management. When Blackstone came in 2019, I was able to sort of transition from manager to owner, and and it's proven to be a great success because the management has built a great business.
So, if we were to ask you about one big challenge that you went through in the last 10 to 15 years, what would that be?
So I think, look, when my father passed away, nobody teaches you in business school what happens when a founder dies. They always talk about succession.
Because Mr. Surinder Kapur was quite a doyen in the industry.
And he ran this part of the business. I ran Sona Koyo. So, coming into this business, there were challenges. We had a lot of challenges. I think, we put our heads to the ground. It took us almost 18 to 24 months to sort a lot of things out. We had an operation in the US. We moved a lot of business to India. We had a German operation. We had a Sona Koyo. We had a lot of different challenges. But, it's been a great journey. I think, from my perspective, what I learned in those 2 years, I couldn't have learned in 10 years in business school. So it's been, the challenges have actually, been an opportunity for us.
Any regret?
Nothing to regret. I mean, we all go through challenges, and I think, managing those challenges and coming out stronger, has been a great sort of learning and a great, has been great for the business.
What is the next inflection point that you're looking for the company?
So I think, again, it's going to be technology oriented. It's going to be what happens in the mobility space as a whole, how the mobility space transforms itself. And this is happening really fast. Whilst, people didn't think EV would catch up this fast, back in 2015, 16, nobody thought we'd be going towards EV at this pace. I think there's a lot of things that are going to change in the mobility space with regard to technology. I think AI is going to play a big role. We have geared ourselves up to Industry 4.0, incorporating AI in our manufacturing. I personally feel, we're going to look at humanoid robots, by 2030. They're predicting 1 billion robots by 2030. I think it's not it's not a dream anymore. So we're going to have to adapt to the changing environment. And I think that's really going to be exciting for us as a business, as an industry, and as an economy.
Is cell manufacturing something that you would like to consider, making batteries in India to localize?
We haven't looked at that space at all, and I don't know how that space will pan out, because I am a believer that OEMs will play a big role in cell manufacturing. So we haven't looked at that space at all.
Okay, and when it comes to getting into making vehicles yourself, is that something you've ever considered? Maybe buying a startup?
Yeah, so I don't think we're capable of making vehicles. It's very easy to say, I'd like to make a vehicle. It's very difficult to do. We understand supply chain for components. Supply chain for vehicles is completely different. Supply chains, to manage a supply chain for a vehicle, to manage servicing, to manage sales, it's a completely different ballgame. And I don't think we're capable of making vehicles, and I don't think we'd ever, and I can say, as far as I can see, we wouldn't make a vehicle.
All right. My final question to you would be about, when we speak about Make in India, it is always said that if you want Make in India to succeed, you have to make in India for the world and actually for exports. So that part of your business, how would you like to expand and grow on that in the next few years?
So I think when you look at Make in India, you've got to look at design in India as well. And that's key. So design in India is going to determine how we build out a manufacturing hub for the world. And I think we have the potential in India to build a manufacturing hub for the world. We surely do have the capability in our business. And I hope that more companies in the component space start investing in technology. I think the government has made great investments in technology, in infrastructure, in capital expenditure. I think it's private sector's turn to now make those investments in CapEx, in tech, and stuff, so that we can build an ecosystem where we become in India the manufacturing hub for the world.
Right, and on China Plus One, you've always had views that you cannot ignore China. You yourself work out of China, you have a operations plant there. How should we deal with the China challenge so that we grow and we can benefit from Chinese technology as well?
So I think, we've got to be open to the fact that we have to acquire technology, and how we do it is secondary. Either we invest ourselves or we're doing partnerships. Whilst we've not been able to compete with China as a nation, into China rather, we've been able to compete with China for the West, but not into China. I think companies are going to have to look at how we can get an inroad into China and how we can get a foot into China. I think that's important because, again, it's a 20 million vehicle market or more than 20 million, and I don't think we should ignore China.
All right, on that note, we'll let you go. Thank you very much, Sanjay, for joining us, showing us around your factory, telling us about your next 25-year vision as well. Thanks once again, and all the best.
Thank you.